The owners of banks may have lost a hell of a lot of money. The people who bought the debt of the holding company, they may lose a lot of money. They can lose a lot of money.
Warren Buffett's Berkshire Hathaway has recently sold off a significant chunk of its stake in Bank of America, which has got Wall Street investors worried amid what could be a very bad sign for the American market.
Are we through the banking crisis at this point?
Well, we're not through with bank failures, but we are through the depositor. The depositors haven't had a crisis. The owners of banks may have lost a hell of a lot of money.
The company has reduced its holdings by about 150 million shares, with total sales since mid-July reaching nearly 5.4 billion. Berkshire Hathaway has traditionally been bullish on financial companies, so this move has led some analysts to speculate that Buffett's decision could signal tougher economic times ahead. Bank of America has been one of Buffett's favorite stocks for the past 7 years, and Berkshire is the bank's largest single shareholder. Selling such a large portion of shares in such a short time could be a sign that economic turbulence or further market challenges might be looming.
We always look at every stock as a business, and we have no attempt made to predict markets. We have no attempt made to pick stocks. I went through many years doing the wrong thing. I got interested in stocks very early, and I was fascinated by them. And I wasn't wasting my time because I was reading every book possible and everything else. But finally, I picked up a copy of The Intelligent Investor in Lincoln, and there was a few sentences in there that said much more eloquently than I can say it. But if you look at stocks as a business and treat the market as something that doesn't tell you, isn't there to instruct you, but it's there to serve you, you'll do a lot better over time.
More recently, Bank of America's CEO Brian Moynihan received much-needed investor love due to the payout in dividend and share buybacks. However, that Berkshire sold almost 15% of its stake within just 6 weeks reveals that the Oracle of Omaha could be worried about the state of the economy and stock market. The sell-off still leaves Berkshire Hathaway as Bank of America's biggest shareholder, with about 11.1% of the bank, according to data from LSEG. Rules imposed by regulators demand the company report sales until Berkshire's holding falls below 10%. Buffett became associated with Bank of America in 2011, investing $5 billion preferred stock as a vote of confidence in Moynihan's leadership to help the bank negotiate out of the crisis following the financial crisis of 2008. In a CNBC interview back in April 2023, when Buffett was 94 years old, he mentioned his appreciation for Moynihan and revealed no intention of selling off the bank's stock. However, some analysts believe the recent sale simply represents Buffett taking profits, considering that Bank of America stock rose approximately 10% in the past 6 months and 38% in the last year. Christopher Marinac, a director of research at Janney Montgomery Scott, described the sale of Berkshire's BOFA stake. The Berkshire BOFA sale is just profit-taking after being opportunistic when the stock was much cheaper. Similarly, Michael Ashley Schulman, CIO at Running Point Capital Advisors, suggested that Buffett likely trimmed the stake to keep it proportional to other holdings, such as Apple, which he also recently halved. Although Buffett is not typically known for profit-taking, Schulman noted that he does occasionally take advantage of strong upside. In addition to reducing his stake in Bank of America, Buffett has been selling off other holdings, including a large portion of his Apple shares. By the end of June, Berkshire Hathaway's cash reserves had reached a massive $277 billion. At the company's annual meeting in May, Buffett explained, "Building the cash position. When I look at the alternative of what's available in the equity markets, and I look at the composition of what's going on in the world, we find it quite attractive."
Let's start. Just given what you mentioned, there was some news that came out in the 10Q this morning. It shows that Berkshire sold another 115 million shares of Apple in this last quarter. That's Berkshire's largest holding. And I think in that vein, we'll start with a question from Sherman Lamb. He is a 27-year-old Berkshire Hathaway Class B shareholder from Malaysia. And he asks, Last year, you mentioned Coca-Cola and American Express being Berkshire's two long-duration partial ownership positions.
The U.S. stock market has shown incredible momentum. After a 24% surge in the S&P 500 in 2023, the index has already climbed another 20% in 2024, despite some temporary setbacks earlier in the year. However, amid this bullish sentiment, Jim Grant, editor of Grant's Interest Rate Observer, has issued a cautionary note for investors. He pointed out the market's lofty valuations, saying, "We shouldn't forget that it is at an all-time high. Almost everything, price to earnings, price to book, price to sales, what have you." He also highlighted a key signal from Warren Buffett, suggesting that Buffett's increasing focus on safer assets like treasury bills could be a warning sign for the broader market. When the greatest equity investor owns more bills than equities, one at least is advised to step back and say, if this is perfection, how does it improve? Grant's comments draw attention to Berkshire Hathaway's large cash position, which has led some to wonder why Buffett isn't making more aggressive investments, given his reputation as one of the world's greatest investors. Between 1964 and 2023, Berkshire achieved an extraordinary gain of over 4.3 million%, far surpassing the S&P 500's return of 223% over the same period. Buffett has addressed this concern, explaining his cautious approach during Berkshire's annual shareholders meeting earlier this year. "I don't think anybody sitting at this table has any idea of how to use it effectively, and therefore we don't use it," he said, underscoring that we only swing at pitches we like. He has also expressed concerns about future risks, noting that as the world becomes more complex, more can go wrong. Buffett stressed that Berkshire aims to be ready to act when those moments arise.
Almost everybody I know pays a lot more attention to not paying taxes than I think they should. We don't mind paying taxes at Berkshire, and we are paying a 21% federal rate on the gains we're taking in Apple, and that rate was 35% not that long ago, and it's been 52% in the past when I've been operating. And the federal government owns a part of the earnings of the business we make. They don't own the assets, but they own a percentage of the earnings. And they can change that percentage any year. And the percentage that they've decreed currently is 21%. And I would say with the present fiscal policies.
While some see Berkshire's cash reserves as a defensive move against a possible market downturn, others, like fund manager Chris Bloomstrand, offer a more nuanced view. Bloomstrand noted that Berkshire's significant insurance operations require maintaining large cash reserves to cover potential payouts. Additionally, because of Berkshire's size, Buffett's pool of potential investments is limited. According to Bloomstrand, Buffett can afford to be patient, especially with treasury bills offering decent yields, currently around 5.3%. He's limited to maybe the 100 biggest companies in the S&P 500 and maybe a handful of international businesses to be able to invest in, Bloomstrand explained. He added that this doesn't necessarily mean a stock market crash is imminent. Rather, Buffett is waiting for the right opportunities, even if that means earning a modest return in the interim. Financial caution has always been central to Buffett's philosophy. In a recent letter to shareholders, he emphasized that Berkshire holds a cash and U.S. Treasury bill position far in excess of what conventional wisdom deems necessary. This approach, he argued, proved valuable during the 2008 financial crisis, when Berkshire continued to generate cash through its operations without relying on commercial paper, bank lines, or debt markets. "We did not predict the time of an economic paralysis, but we were always prepared for one," Buffett said, highlighting the importance of maintaining liquidity in uncertain times.
If the government wants to take a greater share of your income or mine or Berkshire's, they can do it. And they may decide that someday they don't want the fiscal deficit to be this large because that has some important consequences, and they may not want to decrease spending a lot, and they may decide they'll take a larger percentage of what we earn, and we'll pay it. And we always hope at Berkshire to pay substantial federal income taxes. We think it's appropriate that a country that's has been as generous to our owners. It's been the place. I was lucky. Berkshire was lucky it was here. And if we send in a check like we did last year, we send in over $5 billion to the U.S. federal government.
Justin Sun, founder of Tron, recently took to X, formerly Twitter, to highlight a surprising crypto success story involving Warren Buffett. According to Sun, Buffett, the CEO of Berkshire Hathaway, has held Tron, TRX, for more than 4 years. In that time, TRX has gained 1,000%, with a daily return of 0.6%, making Buffett's investment more than 10 times what it was when he first acquired it. Sun, known for promoting Tron, used this opportunity to emphasize that holding crypto is the only way to win. He also noted that if Buffett had staked his TRX, he could have earned even higher returns, possibly up to 1,300%. Sun attached a Tron scan link showing that Buffett currently holds around 1.9 million TRX, valued at $284,146.72. Buffett's crypto wallet also includes other digital assets like the US dollar-pegged stablecoin, Tether, USDT. Despite Buffett's well-known skepticism of Bitcoin and cryptocurrency, he once discussed the topic with Sun over dinner in 2020. This dinner took place at a private country club in Omaha, Nebraska on January 23, 2020. Joining Sun and Buffett were several other prominent figures from the crypto space, including Charlie Lee, the creator of Litecoin, Yoni Assia, CEO of eToro, Chris Lee, then CFO of Huobi, and Helen Hai, head of the Binance Charity Foundation. Although Sun didn't share specific details, he encouraged his followers to take Mr. Buffett's advice and guidance to make Tron a better ecosystem in partnership with other blockchain and business leaders. The fact that Warren Buffett has held on to the Tron that Sun gifted him is seen as significant, given Buffett's cautious stance on crypto.
Warren Buffett has compared Bitcoin to gambling in Las Vegas and rat poison. Now he's going to be talking about it over a steak. Joining us right now is Justin Sun. He is Tron Foundation's founder and BitTorrent CEO. He placed the winning bid for just about $4.6 million for the Glide Foundation's annual charity auction with lunch for Warren Buffett. That winning bid, by the way, allows you to invite 7 guests for lunch with Mr. Buffett. And Justin just announced yesterday on Twitter that he plans to include some blockchain industry leaders in that group. Justin, I want to thank you very much for being with us today. It's good to see you. Let's start this from the back end. How come you decided to bid for this lunch? What made you go ahead and do it?
Yeah, sure. I think there is 3 reasons behind the bid. First of all, I have been a long-time believer for the value investment strategy. I also make lots of the fortune from Warren Buffett inspiration. So basically, I just want to pay back to Warren Buffett for his inspiration. Second thing is BitTorrent and Tron is always focused on our local community. Glide Foundation has always been focused on the San Francisco charity. So that's why we also want to donate to the Glide Foundation for its endeavors in the San Francisco community charity. Third, basically, I want to become the bridge between the institutional investor and also financing institution, traditional investor like Warren Buffett.
That is interesting, though, because at some point the excitement around artificial intelligence was going to overpower geopolitical concerns around Taiwan Semiconductor Manufacturing Co., particularly when the stock continues to rally at record levels. Foreign investors have boosted their stake in TSMC, which has hit a 2-year high. The company had already hinted at this when it made public that AI was going to be its highest growth driver for this year. TSMC controls more than 90% of the manufacturing of advanced semiconductors used in AI. This is according to Pictet Asset Management. This is a huge turn from last year. Last year, TSMC's stock plunged 27% in 2022. In May, Warren Buffett sold his $5 billion stake in the company, citing geopolitical tensions as his reason for pulling out, given TSMC's location in Taiwan. Concerns deepened when the island elected U.S.-friendly President Lai Ching-te, a figure Beijing has labeled an instigator of war.
This question comes from Rohit Belani. Berkshire bought a substantial position in Taiwan Semiconductor and, contrary to its normal holding timeline, sold almost the entire position within a few short months. While you cited in a CNBC interview that geopolitical issues were the catalyst, these issues were seemingly no different when you acquired that stock. So what else, if anything, changed in those few months and prompted the firm to offload close to $5 billion worth of Taiwan Semiconductor shares?
Taiwan Semiconductor is one of the best managed companies and important companies in the world. And there is not, and I think you'll be able to say the same thing 5 or 10 or 20 years from now. I don't like its location, and I've reevaluated that. I mean, I don't think it should be any place but Taiwan, although they will be obviously opening up chip capacity in this country. And actually, one of our subsidiaries that we got in Allegheny is participating in their Arizona construction activities. But it's a question of, we would rather have the same kind of company, and there's nobody in the chip company, there's no in the chip industry that's in their league, at least in my view.
Despite these concerns, some analysts argue that geopolitics might actually be driving growth in the semiconductor sector. Bernard Akong, co-CIO at UBS O'Connor Global Multi-Strategy Alpha, commented, "While geopolitics have historically been perceived as a risk for the sector, the strategic nature of these products and the desire to build local supply chains means that arguably geopolitics has become a tailwind for the space." He added that the semiconductor industry is still in the early stages of its current growth cycle. The core issue with TSMC remains its heavy concentration of chip production in Taiwan. The island manufactures the bulk of the world's advanced logic semiconductors, meaning any potential military escalation with China could seriously disrupt the global supply chain. In another part of Buffett's life, his children are preparing to take on a major responsibility. Howard Buffett, Warren's middle child, acknowledged that managing his father's fortune will be a not-so-easy task. Earlier this year, Warren Buffett, now 94, changed his mind about donating his entire fortune to the Gates Foundation. Instead, after his death, his estimated $143.1 billion fortune will be donated to a charitable trust, as reported by the Associated Press. His 3 adult children, Howard, 69, Susie, 71, and Peter, 66, will manage the trust and have 10 years to distribute the money to charities of their choice. Howard expressed his thoughts on this responsibility, saying, "It's not so easy to give away money if you want to do it smart, if you want to be intelligent about it." Still, he added, "It's pretty amazing that he's giving us this opportunity." Until his passing, Warren Buffett will continue donating annually to the Gates Foundation, a practice he started in 2006, contributing over $40 billion to date. He will also keep supporting his family's charities, including the Susan Thompson Buffett Foundation, named after his late wife. Susie Buffett, who chairs that foundation, once shared with people that her father's relationship with money is different from what most people expect. "He's pretty boring. It's just not what people expect," Susie remarked. She explained that her father's wealth was a byproduct of doing what he loved, and that it's really true that he does not care about having a bunch of money. Do you think Warren Buffett's recent moves are signaling the start of something big? Let us know in the comments.